Okay, got the recording started. Get the chart out. Okay. Thank y'all for your patience. I'm sorry I was obviously up in the middle of the night, and I'm running a little bit behind paying for that now. But I will be up to speed in just 1 second. And okay, I just posted those zones to Twitter and StockTwits. I left some of the notes that I usually take out of there on there. I'm going to start leaving those on for when the room goes private. And I anticipate that I'll be adding notes to the zones. And let me get these out to clients real quick. The yellow lines are the Globex highs and Globex lows there. And we will have the zones posted. We'll have the file sent out electronically in just 2 more seconds here, guys. So this one I'm not rushing around afterwards trying to get this out to everyone. So if my clients will look on TradeStation, on Skype, the TradeStation files have been sent out. If anyone does not have it as of, let's see if I missed anybody here. I think I've got everybody. There's Jeff. I'm missing Jeff. JD. Jew. Bill, there you go, buddy. Sorry, forgot it. Let's see if I'm missing anyone else. I think I've gotten everyone else. If anyone is still missing, please hit me on Skype, and I'll be happy to send those over to you. Okay, and let me share my screen. Perfect. Everyone should be able to see this screen. Is that correct? Thank you, BP. Good morning to you too. Okay, thank you, Micah. Okay. Okay, so let's get started. So obviously we had, relative to the range yesterday, relatively tight day. I posted the trade review in the middle of the night. Clearly we were looking for an opening drive yesterday and a move out of range. That's exactly what we got. It's good to get what we were looking for. I'm pretty sure we have Econ coming at the top of the hour, right after we open at 9 a.m. I'm going to check just to make sure. Let's take a look. Okay. Let's see. And for some reason, I'm going to do it with my wife. I made the mistake of sitting down instead of doing the trade review, so I can only sleep for about 5 or 6 hours straight. And when I woke up, it was the middle of the night, and so I decided to take care of some stuff. So the Econ's not at the top of the hour. It's at 9:55, and it's a University of Michigan consumer sentiment number. There's also an inflation number there. I'm not too worried about that, but there is the preliminary U of M consumer sentiment, and I'm pretty certain that'll cause some type of reaction in the market. Not sure how far that'll carry out through the course of the day, but anytime we have an Econ number that everyone's waiting for, right, a lot of times it causes that kind of back and forth choppiness that I actually like because it sets up some nice scalps out of those first zones, but it can cause a lot of wishy-washiness. Also, keep in mind, because we have the Econ at 9, right, they can always start a delayed open drive higher or lower, though I'm not expecting that today. Normally, after a range extension, we end up with either this type of price action where we get something where if we come down, right, we can push up, come down, we break the prior day's lows, and then we tend to close back up inside the prior day's lows in the bottom third, or we do the opposite. We test down, then we come up, and then we close back in the top third from wherever we are. They tend to be balanced days, but they tend to go into balance after the first hour to hour and a half, and they tend to not close at either extreme. There's no rule that says that the market has to operate that way. It's just the way that it tends to operate on most days. So let's go and look at areas, first of all, that are dangerous today. And what I want to pull up here is, if you look, you'll notice there was almost no counter rallies above this point on the way down. Okay, we re-auctioned up to this 1869 3/4 yesterday, but you'll notice it wasn't until we got down to this area that we actually started auctioning well to begin with. We rejected, once we got to the poorly auctioned area right here above 1869 1/4, we rejected relatively quickly. Okay, so what was the important point behind that? Is once we get up into this area, once again we're into this crap where it is mostly poorly auctioned all the way up, and it's poorly auctioned really all the way up to right in this area right here where we have gap fill. Really from here, really you got to assume because of the gap, really to right here, okay, into this 1884 3/4 to 1885 and a half area. And then again, if we get back above it, again you'll notice right above, we're once again in poorly auctioned territory, particularly above here. It's poorly auctioned right up to, well, really this lip from where we broke down, so we could find rejection anywhere in here. What does that mean for us? Okay, well, again, I'm going to reiterate this because it gets difficult when we get into these areas that are poorly auctioned, and it's been a hallmark of our market for the last couple of months. Okay, so let's just look at it on a 15-minute chart to make it easy for everybody to see. There's two ways to handle poorly auctioned areas. Okay, the market can take an approach where it sits in slowly re-auctions, like we did here. This was poorly auctioned, and you can see we got into this little lip, and we spent some time trying to re-auction this area here. Right, we poorly auctioned. It's very clear to see on 15-minute. Right, this little area is well auctioned. This is all poorly auctioned until we get above this lip right here. Okay, and then once we get above this lip again, we're poorly auctioned above 1895. That's no shock, as that was the high. Okay, so when we get these areas, they look like this, right? So we can either sit here and re-auction and spend a lot of time chopping around. That's fine, no big deal there. We can tell quick enough that that's what it's doing. The danger is when we get to these areas like this right here, where it gets slippery, as this is, and you can see, even though we got responsive buys where there was appropriate size rotations, okay, that the rotations really did not stick until we got back down into an area like here, right, or right in front of this area where we were well auctioned. And you can see, even though we found responsive buys before we got to the point where we were well auctioned, which again is this lip right in here, okay, we got the responsive buys, they pushed back up, but you can see the market came back in and completed that auction before coming back up and re-examining prices higher. Okay, and you can see at this particular point, right, we auctioned right back up to the last place where it was well auctioned, but then you can see above, all of this was poorly auctioned, and we gapped right through it. So let's translate that into how you use that in real time. What that means is, the danger is that when you get to zones that are at support points, okay, if I don't have them blatantly marked poorly auctioned, okay, what that means is you want to see a fast rejection out of that point. The longer you sit there, okay, so if we have a zone, the longer you sit there and accumulate time, and you know that there's really no resistance sitting above, the easier it is to simply pass straight through and smoke you on your stop. Okay, so it changes your time parameter for how long I'll allow a trade to sit there and work. And as you can see yesterday, when it gets really aggressive into poorly auctioned areas, right, once we start slipping through a poorly auctioned area, you can see even 15 minutes really didn't help in some cases yesterday, particularly in the first hour where larger moves tend to happen. We tend to have it be much easier after 9:30. So I think I covered enough on that. We're poorly auctioned. If you look on the 15-minute again below 1860, it gets poorly auctioned again all the way down to this slip down here. And so let's go and see how that translated on the chart. Okay. So the first thing that tells me is there's a couple of things. First of all, this area right here from 1878 all the way up to 1887, basically this 9-point range. Either of these two locations, okay, these are 50 and 62 or variations, my own calculated variations of 50 and 62% retrace locations from the swing high. I will try out of both of these locations to launch trades back to the downside if we get back up in here. What does that mean? It simply means I'm covering half at 2 points, but then I'm expanding my scales. Instead of making them at 3 and 4, I'm probably expanding my scales to 5, and then I'll try to push for 8 and 10 back lower or more if it sets up that way, right? And I'm simply willing to accept the stop and move the stop down to break even, and I'm simply willing to give back the profits on the second half of my trade at both of these locations. I will take shorts first time into this location. However, on the Thursday high, if we get back up in there, I will not give this location any more than 17 minutes, 15 minutes, somewhere right in there, to give me my 2 points. If I don't get it, I will bring stops down to whatever the swing high is at that point, and or break even, just depending on how it sets up in here. It has to work relatively quickly. Why? We're still poorly auctioned all the way up to the gap fill. I don't want to get run over. Same thing in this white zone. I will give the white zone 15 minutes today to give me rejection. Why? Because the hallmark of this market has been, if you remember just a couple of months ago, wasn't that unusual, right? To get a move straight down one day, come back the next day, and get the mirror image going back the other way. I don't feel like getting run over on a Friday. It's been a pretty good week for me. Not a phenomenal week, but a good week. And the last thing I want to do is get run over on a mirror image move, and I don't want to spend a lot of time fighting the market. Obviously, the tick will help us with that, right? So the plan is for me, first time into the white zone, to take a trade. Again, that assuming we open 1868, that would be a nice rotation up, and I am willing to take a trade first time here, and I'm willing to take a trade first time in here, and I will take a trade first time in here, assuming I haven't been stopped for 2 losses prior to getting to this point. On the downside, first time into Thursday's low, assuming that we stick this 1866 area, I will take a long first time into the zone, probably at the front of the zone in this particular gap. No, I stand corrected on that. I'll probably move to the middle of the zone on Thursday's low because we'll have just broken Globex low. And then, by the way, an easier way to set this up for it's a more advanced way. If I haven't covered it with you, this is to my coaching clients if I haven't covered it with you. But if we can get in here and then we can get back above Globex low, I would consider this a trap at this point, and I would look for a push back to the other end of the range minimum and possibly then a push up into the white zone if that occurs. Okay. It is possible also, and I would consider a sign of weakness if we get to the gap, which is at 1867.25, and we're unable to reach Globex high. If that occurs, I would look for a test, actually not just of Globex low, which you notice I don't have a zone there, but actually of the lows from yesterday. I would suspect that we are going to retest that at some point today. Again, if we break, I will take a trade the first time to this 1853, 1855. For guys that are more aggressive, I actually wanted the zone up at 1855.50. I just didn't want to add it to the 2.5 points. There is a risk of this zone because the way the structure is that it one ticks right in front of us here. So adjust accordingly as you need to. I'm sticking with 1855 to 1853 just because I'm willing to miss. But if you look at the if you go back and look at left of the structure, which I'm not going to do, it is quite possible that we one tick right in front of this zone. It was just kind of a no-win situation no matter where I move this zone. If I move it forward, there's a chance that we test all the way back to 1852 and it stops us out. So at any rate, this was my compromise, was 1855, 1853, but I really would have liked to put a 3 or almost 3.5 point zone in this. This 1855, 1853 has been pivotal the entire time through. Another point about this particular location, guys, this was half back from the 29th lows that we had, where we got response. It was half back and modified. I have a modified way of measuring it. Half back and 62 back location, where we got these responses yesterday. And again, I would not be surprised if we just barely penetrate the lows and get a snapback and make a pushback to re-auction these poorly auctioned areas. Would not shock me at all. Just bigger picture thought there. Okay, so I'm taking along Thursday's low. I am taking along at 1855, 1853, and I'll take along at 1847. You know notice I've left plenty of space down here. Again, that is because below here, okay, if we go back far enough, hold on a second here. Okay, there we are. Below here, incredibly poorly auctioned, okay? Particularly everything below this little step right here, right down to this area right here. Now, you may find a response of buyers, okay? So what happens a lot of times, you'll see people, right, step in, like there is a zone there. It's basically 1840, let's call it 1849 to 1851. There is a zone, but this is a location where we could easily see it, right, come in like this, take a stutter step up, and then flush through down into the support, right? And then technically, actually I need to adjust this here because I didn't capture this properly. So make the adjustment on this zone down here, this 1845, bring it back a little bit more, bring it 1844, 1844.25, 1846, and actually I'm going to adjust that, make it 1840. I hate when it does it like this. Let's see. Let's make it 1846.75. I don't like this at all. Hold on a second here. I'm going to have to go look at the volume profile real quick here. I'm going to opt for 1844.50 to 1846.50 here. Sorry, I made an error, and it may have been just I did this too late at night. And let me go look at the volume profile here real quick in that area. 1846. Okay, so we're actually poorly auctioned right down to this little lip right here. It says 1844. Why am I getting a different reading when I look at the chart? Hold on a second here. Oh, it was my mistake. 1844, 1846. Right to the bottom of that poorly auctioned area. I know what I was thinking when I saw this last night. Okay, so they could step in front of this 1844. They don't have to re-auction all the way down, is the danger. It's 1844, 1846. Okay, so this again could be another situation because it stops. You see they came in with a response. It starts to get poorly auctioned right in this little lip. And so right at this point, this 1847 and a quarter, we could end up getting responsive buys here and have not pushed all the way down, all the way back, essentially creating a higher low. And that's just going to be the cost of doing business for me. I'll push back to this 1846, 1844 location. I will take a long there. And then if we get below there, okay, so the next area is this 1838, 1840. There's an open gap. I know I didn't publish this yet. This should actually be colored red. There's an open gap sitting there. If we get down in here, again, I'd be surprised if we got all the way down here. I will take a long from that location as well. Really, everything else underneath, I'm fine. This is poorly auctioned. I'm not taking the location in this particular area. Okay, let me move on. Get rid of all this. So this is just to give you all a little bit different, additional color. For some people, that's going to be too much information. For some people, are going to go, oh, that's great. Okay, so just to be clear, bigger picture. This is the mirror image of this from swing high to yesterday's low. Okay, I would suspect somewhere in here that we're going to get rejection. But my thought is if we don't get the rejection quickly out of here, that we're probably going to push all the way to the back, and it's even possible to push a little bit further behind before we get the rotation lower. I don't see it as being overly bearish or overly bullish. Also, what are the canaries in the coal mine has been for the last 2 days? Has been NQ. Yesterday, we couldn't complete the breakdown without NQ breaking down, but ES was still the leader on both the upside and the downside. They just weren't as aggressive with the NQ on the downside yesterday, which is why ES was the leader. ES opened below the prior day's low. Okay, it broke lows. It had failed a attempted trap trade early. NQ is actually much more stable, okay, but it's because it's been following ES, not vice versa. Prior, if you recall a couple months ago, NQ was the one that was breaking lows, breaking prior day's lows, and then ES was following. Now it's ES is leading us in each direction with NQ following. So what am I looking for? First of all, I want to see ES. If it stays positive, right, if I'm trading NQ, I'm not going to get overly bearish over there. If I see NQ go negative, I'm not going to necessarily assume that ES is going to follow. I still think ES is the leader in this market. I still think the rotation is out of the small caps and into the larger blue chips, and therefore I think the rotations at each zone will maintain for the most part. Yesterday was an exception. And again, I'm not expecting an open drive higher or lower this morning. Okay, so I'm looking for the tick to be plus or minus 500 prior to the news, and then I will see that it's staying that way. When are our reversal hours? I know I'm running a little clunky this morning, guys. I'm sorry. I think I was just my sleep pattern got thrown off last night. Okay, so we tend to get reversals post 9:30. So if you'll look right here yesterday, here's 9:30 a.m. Prior to 9:30 a.m. on an open drive lower, it was hard. After 9:30 a.m., if you'll look and you'll pretend like the day started right here, okay, this day got significantly easier to trade at the zones. Even though it pushed us all the way back to that 2-point stop, they came back up and reversed and gave you a shot either to get out break even within that 25-minute period of time, or I think profitable depending if you took it anywhere except the very top of the zone. Okay, and by the way, we're pushing new highs in both ES and in NQ. Uh, 1878.50 to 1879. Thank you. I stand corrected. He is correct. I made this a 3-point zone. You need to correct this to 1879.50. It should not be a 3-point zone. Thank you very much. I will correct that. Someone pointed out again. I probably should have done these before I left for dinner last night, so I apologize to y'all for that. It should be a 2-point zone. Okay, so again, 1879.50 to 1881.50 is the correct trade size there. Let me make sure I got these right above. Okay, let's get rid of this stuff, get rid of this stuff. And then the year-to-date high. I will post the zones above. Obviously, 1900 is key. And then the other thing that you'll need to post on here, okay, so we closed 1867.25. I did not have this on here. So you will see that from 1867.25, you should have 1877.25 tagged off, which would be approximately right here. Just have it marked as 10. 1887.25, which puts us approximately right here. Tag that off as 20. And then go ahead and mark the 30, and then do it the other way as well. So if you notice yesterday, while we were trading, you'll notice that same exact, and again, the rotations are something I cover extensively in the coaching. However, you'll notice yesterday on the chart, and I'll bring this up, that I had them marked off the same way, 10 and then 20, okay? Generally, when the stretches get down to 10, 25, 30, that's when I'm starting to look for counter rotations, and you can see that's when the rest of the market starts looking for counter rotations as well. It's not like I figured out something that no one else figured out. There's 20 back. You can see they started to have responsive buyers. This was approximately 25 back location, right? And we got a reversal back to the upside. The market has been stretching, right? Think about the last 2 months. On balanced days, we've had large balanced days have been 10 to 15 points recently, but if we go back to March, 10 to 20 points. Directional days, meaning we're moving out of balance, have been 20 to 30 points, getting responsive buyers between that 20 and 30 on a regular basis. On balanced days, we've been getting responsive buyers between 12 and 15 points for the most part lately, meaning the last 2 weeks. Those are the responsive buyers have been coming in. Okay, we're clearly getting a push to the upside out of the gate, so you need to adjust Globex high on the chart today. But this is the reason why on the chart you'll see those 20s and 30s most days. Okay, and let me see where we're at with the. Let's clear this, and then we'll take a quick look at NQ, and we'll take a quick look at the volume profile. 1871, it looks like we're going to push right up into the white zone right out of the gate. Okay, so hopefully they'll be merciful and they'll just simply move the Globex high into the white zone and make life easy on us, right? Otherwise, the way I would handle that, if that's the case, is I would actually, instead of trading the Globex rejection right out of the open like I usually do, okay, I'll simply wait for the white zone. As long as I can get some kind of rotation into here, meaning more than a point. Now, what's likely to happen because of this is we're very likely to come into this 1874 area. I will simply see if I can get a push to the very back of this white zone for a push back to the downside, right? So, since we are pushing out of the gate, what are we looking for on the open drive? So, just like yesterday, this is a mirror image of what an open drive looks like right here. First 3 bars, this is about as picture perfect as it gets. First 3 bars, all negative. First 5-minute bars not exceeded. Inability to get half gap or gap fill. Okay, essentially there were less than 2-point counter rotations up all the way through this. When you see this in the first 15 minutes, guys, okay, it's all right to say in your trade plan, dude, I just don't trade open drives higher and open drives lower until the first hour passes. Why? They tend to get considerably easier after the first hour. What's the psychological price that you pay? There are occasions when we open drive higher, we reverse, and we have huge responsive sells. You miss this. That's the price. Okay? What's the cost of taking business there? If you're going to try to take a counter trade on an open drive lower, the cost is exactly the price that I paid yesterday, taking the trade into the open gap. I took a 3-point stop, and I moved on with my day, and I accepted it as a cost of doing business. Where people get in trouble with open drives is not that they get stopped, and it's not that they make a killing in it. What they try to do is they put themselves in a box that says, I don't want to trade it if I'm going to lose money, but if I can make a lot of money, I want to trade it. Okay? And that's what you call a lose-lose situation. Okay? Because there's no way you come out a winner. If you don't trade that and it makes the move in your direction, you missed a trade and life sucks. If you took the trade and you got stopped, you misread it and life sucks. So they're easy enough to identify, right? Usually, if you just sit out the first 15 minutes, you can tell there's an open drive higher or lower. We were expecting that open drive higher or lower yesterday. Just sidestep is all you have to do in that particular situation, and you will make just sidestep that, and you will avoid the majority of the pain in your trading account. And as soon as you see this, just go, market opens for me at 9:30. When we tend to have open drives, the day tends to push later, and the afternoon often are one of the few afternoons that actually provide decent trading opportunities. Okay. The other part, and I tweeted this out yesterday, and it was important. One of the things I remind myself on days when we drive down like this is that I have a big note in my. I have a checklist that I make out for my key points on open drives lower and open drives higher, and that checklist says that the gross majority of days we do not close at the highs. But even more so on down days, even in bear markets, we tend not to close on lows, not to get overly bearish. And that is why I did not try to repeatedly short yesterday afternoon. I think I took 2 shots at shorts yesterday. One I published, one I didn't. The NQs worked both times. The ES I got 1 scale off for 2 points. I left a trailer and it got stopped, and I didn't try to retake it or sit there and fight it or mess with it at the end of the day. I gave it 1 shot. It simply didn't work. And we could have easily, if we could have gotten above this lip, we could easily auction. There's not much holdiness. I want to remind everyone this morning about this white zone here, okay? There's not much holdiness from going straight back to yesterday's highs in terms of resistance. There's almost nothing there, okay? And even up into this close, okay? So what will we be watching for off the open? Open drive higher, open drive lower. Also, we'll be looking for the response off of the 855 econ that's coming out, right? The next thing I'll be looking for is tick plus or staying consistently positive or consistently negative. If it's all on one side of the balance sheet or the other, I'm going to look for a grind in one direction. If it's balanced, plus 500, minus 500, what I'm thinking we'll get is that the first hour will give us a directional move. We're already getting a gap, right? So now the question becomes on this gap is, do we get gap fill? Number one. It's not a very big gap, so is half gap becomes the question, right? So it's really a question of, do we get gap fill, and what's the response at gap fill? Number one, right? After we get here, do we get rejection out of Globex highs? If we hold above Globex highs going into that number, right? What I want to see is us close back below Globex highs after that econ data, right? And if that occurs after coming back, getting gap fill, making this push up, right? If we close back below and hold below, I'm going to look for a push to the other end of the range, which at this point is still Globex low. But then if we get down to that Globex low, what I'm really looking for is a test of yesterday's lows. Okay, and again, it'll be easier to tell once the market opens which way we're going to be running with this. So again, I want to be clear. I probably am taking a short out of the white zone first time in. Okay, and then I will be scaling the 2 points, probably 3/4 of my trade at 2 points, and I'll be leaving a trailer, and I'll actually be leaving this trailer to see if we can come down and test Thursday's low with that small position. Will be what I'm shooting for. I may cover at Globex low, I may cover at Thursday's low, but that's what I'll be shooting for at any rate. Above here, Thursday's high, again, this thing's got to work in less than 15 minutes or I'm gone. And actually, quite frankly, the same thing at this point here. It's got to work in 15 minutes. If we can get up to this 1892, 1894.50, I am willing to take a loss here if we get back up here. And I will almost certainly take a 4-point loss at this point, assuming that I can still trade it. I do have an obligation after 10 a.m. this morning, so if none of this happens before 10 a.m., I won't get any of it unless it occurs in the noontime. I'm willing to take this trade in the afternoon, by the way, as long as it doesn't hit in the last hour. I'm willing to take the fade out of this location as well, just FYI. And then also this 1890 level is actually where we broke down from, and this will be a breakdown retest. So you can add if you'd like. I'm not trading it. I don't even think we're going to get up here, quite frankly. But this 1890 level is a breakdown retest right there. Maybe even like you put it 1889 to 1890, and we might get rejection prior to hitting here. The other thing that'll help you if you're looking for trade location, and I posted this yesterday in the trade review, is 1 minute tick divergence at the zone, especially in the afternoon when you're looking for a trade entry. The 1 minute tick divergence, especially when we've gone to a non-ripping market, makes life much easier in terms of getting trade location. Okay, just don't try to force those 1 minute tick divergence. Can simply be good for 2-point rotations. You have to scale those. Again, don't get locked in your head that we're going to go straight up or that we're going to go straight down. Let's see if I have anything else that I want to point out. Oh, I do have something I want to point out that's actually quite important. 1 second here. Ron, sorry. Give me just 1 second. I'll get that over to you. What did I do with the file? There we go. There you go, buddy. Ron, I just sent it over to you. I apologize. Okay. Volume profile. Thank you. Yes. There we go. Okay, remember I've been talking about this concept of, and I've spoken with this abundantly with my clients, meaning coaching session clients. Okay. Look, this was the top of the range on a closing basis right here, this 1880, where we kind of stutter stepped. Look, all the opens and all the closes have been below this 1880 deck, right? We're currently opening up at approximately, I don't know if I can pull this back up now, 1871. We're now trapped underneath. This is a trap trade, guys. Right here, see this? Trap trade. And this is technically an island reversal, I think. I'm not sure you can do that. It's a Japanese candlestick term, but sure looks like an island reversal, right? We're now trapped underneath. What normally happens in a range, I've been stressing this again and again. We tend to, just like here, right? We look like we're breaking down. We got back up into the range. What did we do? We traveled back to the other end of the range. How long did it take us to get to the other end of the range? From the time we trapped, it took us an additional 1, 2, 3 days to get to the top. Then we spent another 1, 2, 3, 4 days to get to the bottom. Then it took us 2 days to get to the top again, and we hung out here for a couple of days and then drove everyone nuts with chops. Okay? We've now closed back underneath. If we'll look at how that pattern worked last time, right? We got underneath, we gapped, okay? We pushed higher, then we pushed lower. Next day we opened flat, balance day, pushed up. The next day we opened with a slight gap, pushed up to the top of the range, and then pushed back. The point of that being is once we were back in the range, the majority of the days, right, even on the downside here, we opened high, we pushed down, we pushed back up. The majority of the days within the range look like this, okay? I expect to get this price action today. There almost wasn't a single day when we were within this range, okay, that we were not getting this action. And even when we were breaking out, right, you can see down here, went down, went up, opened high, pushed lower, pushed back up, opened down. Well, actually, we opened up, pushed down, then pushed back up. I'm looking for either this or I'm looking for either this. When do these turns occur? These turns tend to occur between 9:30 and 10:30 on most days, Central Time. Okay, so this is what I want to be clear. This is what I'm looking for. We're in the range. Unless we get back over this 1880, I'm expecting that we're going to come down and test this 1844. And again, that 1839 is still begging right here at this 1840 level, is begging to get tested. Again, we're trading 1870. I doubt we get it tagged today, but it's certainly possible that we could tag that Monday, maybe even Tuesday. How will I know that scenario has changed? We close again above 1880. We're back out of the range, and the upside shot is available to us again. Okay, let's go look at NQ really quick. Okay, NQ. top of the range. We try to break it. We close just outside of it. We've fallen back into the range, right? So what happens? 3606 neighborhood, right? We know from 3600, really from right here, 3600 up to right here, we need to, as long as we close below this little lip, we're in the range. Where's the bottom of the range right now? It's right now 3500. Okay, so next question. We take a basic Fibonacci tool and we look for where this 50% retrace. This was, if we go from this point here, this is 50 to 62% back. Obviously we found responsive buyers there, right? If we look at it from this way now, 50 to 60% back. Okay, brings us to this 3582. Where are we opening? 3571. 3582 to 3592. We have a significant chunk of volume sitting right above 3600 again. Again, that's right above the lip. It is possible to push just back behind that and push lower. But we know that we could probably start looking for resistance at these points, and we know that since I don't expect a directional day today, we know that we're looking for what type of rotations? 15-point rotations are going to be the key in NQ, I think, again today, right? With extensions, meaning wider range, up to 30. I don't expect a 30 and 60 to come into play, but if we get an open drive higher or lower, or a wild reaction to whatever the econ is at the top of the hour, then you go 30-60. But I'm assuming 15 is going to be it. It's 8:30. So guys, let me go back here real quick. So this 1871 and a quarter, excuse me, 1871.50, I'm going to leave alone. I'm going to leave the white zone right where it is. I'm just simply going to extend. I'm going to just, essentially what this does is we're going to move the white zone down a hair. We're going to make the Globex high, the front of the zone, okay, the 1871.50, and we're going to move it back to 1873.50, okay, and the 2-point stop behind should still keep us relatively safe. So that's how we're going to adapt on the white zone there, and that's also Globex high. Just realize that, okay, that's the adjustment there. And as you can see, it looks like we're attempting for gap fill here. I wanted to bring up one more point on NQ really quick while I'm still at it. Okay, so on NQ, right, the extended range for 50 back, let's get rid of this. Oh, we've covered that. Is this. Okay, it's not enough just to go, oh, that's 50 back, I'm taking the trade. You got to look for structure in that location, okay? But what was I going to say? Oh, this area down here, right through here, this 3514 down to 3488. 3480 has obviously been a favorite place of a lot of people. I would be looking, if we get down here somehow, which wouldn't be incredible, right? We're at 3563. If we take a 60-point run, we'll land right in the middle of this. And this location right here specifically is where I'd look for responsive buyers. For if we can get all the way down here, right in this little lip, right at 3500, I would expect a responsive buy right there, and possibly off of this slip right here at 3510. So somewhere in here, I am not looking for the world to end. I'm looking for responsive buys to push us back up into the range. Okay, ranges usually don't break. We usually don't trade through the bottom of ranges. We usually gap below. My guess is in order to get down and retest this stuff, it'll be on a gap down one day as opposed to just simply trading through it. I think that's all I got today, guys. Let me look at the 24-hour profile real quick to make sure there's nothing I'm missing. Just again, below this point right here, guys, below this 1860, man, it is just really, really thin till this 1844, and then we have this open gap here, but there's not a tremendous amount of help till we get right into this 1824 to 1827 location. There's not a lot of help. If we get down to 1824 somehow, I will be a responsive buyer down here, by the way, and same thing with and probably at 1827, and again this open gap, and then there's also 31, 33 is the support level, but not a significant support level. So I'm sorry I was so tired. I was up late last night trying to get things fixed. And let me see if I have anything. Hey, my pleasure, guys. So I hope this helped everyone. I know some of y'all have to drop off to actually do some trading. Let me see if I can get my bearings about me and actually make a trade this morning. I'm obviously the subscription. I posted a subscription page to my blog. Brian, one of my coaching clients, pointed out very rightfully, I try to get too much done on my own. I should have hired someone to do this for me. I will go back and get that done. It's going to be $95. You can cancel anytime you want. It's a month-to-month subscription, and I think if the 2 points don't pay for it, that you shouldn't do it. The whole point of this is to help with the educational portion of it. I will post this in a little bit. I hope this is helpful to everyone, and we will talk later. Remember, we haven't tested that Globex high yet in the regular session. Pretty sure we haven't. Maybe I missed it and I was just slow. GSM 14.D. We have not tested Globex high, so I can tell you the first time we pop into that Globex high, I will probably be at this point willing to take a short. We have had gap fill at this point, so let's see if they push it up into the econ, and we'll go from there. Again, I want to watch to see if ES can stay positive or if it turns negative, and I'm definitely looking for the trap trades today. Trap trades tend to be great after range extensions. We'll talk later, guys. Have a wonderful day. Sick.
with that, right? Look at how much time we actually spent